Welcome friends, Asli Bania welcomes you once again. Today we have brought you another multi-bagger stock, that is DHN India Limited. This company manufactures the welding consumables which is used in a variety of industries. So let's see. This is our standard disclaimer. I am not a SEBI registered analyst. Before investing in this stock, please consult the SEBI registered analyst. And this report is only prepared for educational purposes only, and no liability will be accepted. D&H India Limited introduction. So basically, D&H India offers variety of welding consumables for diverse industries like steel, shipbuilding, petrochemical plants, cement plants, construction, transport, offshore platforms, energy repair and maintenance. So the company has two facilities. One is located in Indore and other is located in Ghata, Bilod. Both the plants are ISO 9001. The company has got approval for its products from various reputed engineering companies as well as consultants like Lloyd's Register, uh, ABS, BV, DNV, BHEL, and similarly PDIL, Nuclear Power NPC, and EIL. So you see, those are big projects. In addition to that, NTPC, IUCL, Tata Projects, Reliance, SAIL, Toyo. So the customers are very reputed and they do a lot of work in India. So coming back to financials, if you see financials, the financials are not very interesting except uh, the last year. So if you see, the top line is almost constant, which varies from 60 to 70 crores, whereas the last 4 quarters top line is around 80 crores, whereas operating profit varies from 4 crores to 5 crores. And if you see, basically, the company had very reduced profit in last 3 years, like March 2016, 17, and 18. So that is why the company did not pay any dividend. So, however, in the latest quarter, company has reported good profits, and if it continues, then the stock can be a multi-bagger. So this is the quarterly result. So if you see specifically the December 2018 quarter, the sales have increased from around, like, as compared to December 2017 quarter, from 18 crores to 21 crores, whereas the profit after tax has increased from 5 lakhs to 1.33 crores. So the margins have expanded. So similarly, if you see, the company has two product lines. The segment revenue is like welding electrodes and consumable. Other is metallurgical cold wire. The company has started reporting it from current year itself. That is why previous year's results are not segregated. And if you see, basically there is a considerable margin expansion in welding electrodes as compared to September quarter. The the basic reason for this margin expansion is not currently clear, because if you see, the top line has remained from 16.56 crores to 16.72 crores, whereas the profit has increased from 61 lakhs to 1 crore 56 lakhs. So the reason for it is not clear, but however, if the company delivers such good results for next 3-4 quarters, then it can be a multi-bag. So the other thing is, if you see, the company is generating ca positive cash flows from operating activity, and they are paying back their debt. So that is a good thing. Now, coming at the pros and cons of the company. The company, like as I explained, company used to pay dividends, but last 3 years they did not pay dividend because of reduced profits. However, the profits have increased in this year, so there are chances that dividend will be declared. The promoter holding is quite good. It is at around 47%. Company is trying to reduce their debt, and that is also a good thing. um, Demand of welding consumables is generally linked with the growth of the country. So if there is and the growth rate is high, so there will be increased spending on infrastructure and the demand of welding consumable increases. However, in the cons, like the latest quarter, the result is good, but the company has to show consistency in the future quarters. So we have to see for the future quarters as well. Now coming at the final review for D&H India, D&H is available at CMP of 22.5 rupees, PE of 11.25 and market cap of 17 crores. The company's competitor ESEB India, whose historical PE is around 39, and Adore Welding historical PE is 20.7, are trading at much higher valuation as compared to D&H India. Uh, but like if I pro rata increase the revenues based on last quarter, so revenue expected for next year will be around 85 crores, and the net profit after tax will be around 4.5 crores, generating an EPS of 6.2. Now coming on verdict based on this is like based on this EPS, the minimum price expected will be rupees 124 based on PE of 20. And this can be a 5x opportunity from 1 year's perspective. However, this is a high risk stock, and if the company does not perform in future quarters as shown in December 2018 quarters, then there will not be any chance of multi-bagger returns. And so what I would suggest is give slightly lesser allocation or wait for the current quarterly results before making investment in this stock. Thank you friends, and if you like my presentation, subscribe to my channel now by clicking on the link below the blue color arrow, and thank you and see you next time.